We're now been joined in the studio by Johnson Chukwu, the CEO at Cowrie Assets Management Limited. Good morning, Johnson.
Good morning. Happy Independence Anniversary.
Very well. Same to you. Thank you for coming on the program. We hope that Segun Akonji will also join us here. He is the head of the investment at Heritage Bank. We're expecting him to also join us on the program just before we end it. All right, let's start with the economy at 54 before we talk about the mergers and acquisition issue. What is your assessment of Nigeria's economy?
Well, Nigerian economy has grown over the past 54 years. Nigerian economy used to be agrarian in nature. Major export was basically cocoa, granules, palm oil, and palm oil related products. I mean, at the exception of the independence. But we've seen a transition from an agriculture-based economy to an oil-based economy, and now we are transitioning to an industrialized economy. If you look at the GDP of the country, you see we have a more diversified economic structure than what we used to have maybe 10, 20 years ago. We have an economy that you have the telecom sector accounting for more than 9% of the GDP. You have the manufacturing sector also accounting for more than 9% of the GDP. And then you have the construction industry growing at a very fast rate, the retail, wholesale and retail trade growing at a very fast rate. Then you have oil and gas no longer accounting for 90% as it used to be at some point. So we are seeing a broader economic space, and we're also seeing a growing economy. We saw the GDP grew by about 6.54% in the second quarter, an improvement over the 6.27% in the first quarter. I think, give and take, we have also seen with the recent rebasing of the economy, we have a $510 billion GDP as at December 2013, which, if you look at the current GDP report of second quarter, our GDP has actually grown to about $522 billion. If you look at all those factors, you actually see that the economy is growing.
Okay, I know that we've had uninterrupted 15 years of democracy in Nigeria. To what extent do you think that would have contributed to the growth in the economy?
Well, what we've had is that we've seen a consistent implementation, but for a blip during the Yar'Adua years, of a liberalized free market economy. Obasanjo came and tried to liberalize a lot of things. He introduced the telecoms revolution. He allowed, he introduced the cement industry bill, policy, which has led to the growth in cement production from about 2 million tons to about 28 million tons. We've also seen consistent implementation of a diversified free market economy, like I said earlier. We are seeing a sugar policy. We have seen an Nigerian industrial revolution policy. We have seen a consistent implementation of a liberalized telecom sector. But then we've also seen a liberalization of the power sector. So if you look at the benefit of democracy over the past 15 years, we've seen a democratic system that allowed the private sector to thrive. Unlike what we used to have under the command and control system where the military is known for. But for Babangida's government, the military government of the past had maintained or ran a centralized economic system where the public sector dominated the economic space. But Babangida was the first of the military government that actually introduced some level of liberalization. And we also seen, in the case of civilian government, consistent liberation of the economy over the past 15 years. But like I said, for the period, a short period of the Yar'Adua government, when there was a reversal of some of the liberation policies, like the issue of sale of the refineries, there was also reverse, and then reversal at some point, momentarily, of the power sector reform. But we've seen almost the end of the power sector reform. We've seen the sale of assets to the private sector, power assets to the private sector. So, and we've also seen improvement in the regulation of the banking system, the financial system. We have seen more stringent regulation of the financial system. So if you ask me, I would say, look, democracy has encouraged the private sector to thrive. Democracy has encouraged the economy to broaden in terms of the sectors that account for our GDP.
Okay, I know that we will be looking at this topic in details tomorrow. We'll be expected to be joined by the DG of the LCCI here on the show to talk about this in larger scale. I'd like us to move into the issue of mergers and acquisition, and that has been on for a while in the financial markets in Nigeria. What's your take on what's been going on in that respect?
Well, you see, one of the major consolidation has been part of the Nigerian banking system since we started, since in 1892, when the African Banking Corporation was set up. But we're also seeing some level of intensity under the Obasanjo government when in July 6, 2005, so, then CBN Governor, Professor Chukwuma Soludo, came up with the policy that banks should increase their capital base from 2 billion to 25 billion. That led to a forced consolidation of the 89 then banks into 25 banks, which later became 24 when IBTC and Stanbic consolidated. We've also seen another round of consolidation. After the failure, after the economic crisis of 2008, 2009, the financial crisis, we saw a lot of banks that had weakened financial base. And then we saw some of the banks taken over by the central bank. And we also seen another round of consolidation of those banks by merging with or being acquired. We saw a couple of banks, those banks acquired by their fellow banks. So we've seen over the period of 15 years, we've seen two rounds of consolidation. The consolidation that was induced by capitalization requirement of 25 billion, and then the consolidation of the weak banks that couldn't meet the capital requirement, or they became insolvent as a result of the financial crisis of the 2008, 2009.
Okay, I know that it's not just about the banking sector that is, witnessing some level of mergers and acquisition. We've seen what's been going on in the capital market as well, where they've been asked to recapitalize, and there's been talks as to whether some of these companies or the dealing members of the exchange will have to merge. What's your view about that? Of course, we still have the December 31 deadline that has been set by the SEC for that to take place. But what's your view about this whole development?
Well, what I would ask market operators, of which I'm one of them, is that we should we should learn from what happened in the banking industry. Like I said earlier, the banking industry in 2005 had 89 operators. Some of them were fringe players. The market was highly fragmented, but for the 3 or 4 or 5 banks that were very strong, and if you look at it, some of the banks today that account as one of the systematically important banks only had capital base of 3.5 billion in 2005. But today, the capital base is running to 3 trillion naira. Okay, but beyond that, the fears that we expressed at the point of consolidation in the banking industry were there will be loss of jobs. Okay, but
that happened.
Yes, but at the end of the day, the number of employees in the system that now has about 23 banks is more than the number of employees that were in the system when we had 89 banks. We had 89 small fragmented banks that did not have the financial muscle to do business. Today, if you have a valid bankable transaction and you go to a Nigerian bank, you can actually borrow 10 billion from a single bank. At that time, 20 banks have to come together to syndicate 20 billion naira. Because the capital base of the banks were 2 billion, and most of them were operating about 2.1, 2.2 billion naira capital base. So for them to lend to you 10 billion as at that time, you needed about couple together about a team of about a syndicate of about 10, 15 banks to do that. Today, 10 billion naira loan is no longer considered as a systemically important loan. But beyond that, you have to look at what are the values that we've gained from the consolidation. We have an improvement in system. We have an improvement in retail outlets, in terms of multiplicity of retail outlets. Beyond the brick and mortar branches, you have ATMs, you have other alternative payments systems that the banks now have the resources to deploy. And why I'm saying this because by the time the capital market operators consolidate, they will have stronger technological base because they have the capacity to acquire the technology. They improve on their service efficiency because they will have a stronger technology and better training for their staff. They will have a better pool of skilled labor which they can afford to pay for. Then beyond that, it will even be easier for them to operate in other climates, in other economic spaces, like possibly trading in Johannesburg Stock Exchange, London Stock Exchange, New York Stock Exchange, because they will have the wherewithal to reach out. If you remember immediately after the consolidation, a lot of Nigerian banks began to expand outside the country. Prior to that, Nigerian banks that had 2 billion could not have gone to spread themselves outside the country. Today we have GT Bank in London, we have Access Bank in London. Prior to that, we only had 1 or 2 Nigerian banks operating outside the country, and they were operating as representative offices, UBA in New York, and I think First Bank had a representative office in London. But now those are full-fledged banks. Nigerian banks are operating in Uganda, in Congo Democratic Republic, in Liberia, in Sierra Leone, in Ghana. So Nigerian financial institutions have become multinationals in other countries because they have a stronger capital base. They have a larger pool of skilled labor. They have adopted the world-class technology. And those are some of the benefits you have to look at when you talk of consolidation. Consolidation will allow you to acquire competencies you do not have internally.